What's going on, guys? My name is Richard and welcome back to the stock analysis video. And this week I wanted to talk about NIO, which had been probably the strongest stock in the market, but you can see it's experiencing a little bit of weakness today. But overall in this video, we'll go through its fundamentals and MarketSmith, which is sponsoring this video, and we'll also dive deep into the technical chart and really analyze this move because it's been on fire. It's probably advanced more than any other stock in the market over the past few months. And it is one of the leading stocks in the leading group auto manufacturers, which also includes Tesla, of course. But this stock has been showing clear signs of relative strength, and we'll really dive deep into it today. So if you enjoyed this video, please go ahead and leave a like down below and subscribe if you're new to the channel, and let's get down to it. So overall, let's go to a weekly chart and analyze these fundamental criteria over here. And overall, there's not too much to like in terms of fundamentals for the stock, for NIO. You can see it is a leading stock in a leading group, but there's not that many signs of growth in terms of numbers, in terms of sales and earnings. I know there's been some reports coming out over the past few weeks where they've reported better than expected deliveries, but overall that growth hasn't shown up in these key statistics, the sales growth and earnings growth, and very importantly, the earnings estimates for the next few years. Really, I want to be seeing estimates over 100% ideally for this growth, and greater than 25% is very, very good. And overall, you can see the EPS rating is only a 54. The group RS is very good, 98, but the SMR rating is an E, accumulation distribution is an A+, and the overall composite rating is a 97. And overall, there are some signs of accumulation, as you can see from this rating. You've got great fund ownership increases, but you do not have any high quality funds starting positions in the stock, which is a reason to be a little bit more cautious, especially if you're looking for an entry up here when it's already had a very, very large move. So overall, going back to a daily chart, let's talk about the bases that's had, because it has had quite a few. And let's see, looking at the chart, you can see it advanced from a stage 1 cup with handle way back in the end of July, in August. And since then, it is 199% from the pivot in just 58 days. So a very strong move. But you can see the clear downside reversal here on this Friday. So overall, there have been a lot of opportunities to get into this stock. I've traded this quite successfully during this run, getting a nice chunk of this 200% move. And we'll really dive deep into technicals in just a second. But I want to clearly point out that there's no real growth here in terms of sales and earnings. Last quarter, sales were up 140%, and really that's the only sign. But overall, in terms of the fundamental picture of this stock, it's more of a story at this point than a growth company that's proving itself quarter after quarter. And overall, if you don't know, NIO is a Chinese manufacturer of electric vehicles and parts, and also provides battery charging services. So with the fundamentals now covered, let's go over to a chart in TC2000. And overall, you can see it just broke out above its green line a few months ago. And this green line value was 13.8. And you might think that after a huge move like it had from the March bottoms, you can see this was up about 850%. You might think that you missed the move, but really it was just getting started, because from this point, it has increased to the high another 208%. And now, because of this downside reversal today, it's up over 200% still. So don't think just because you missed the initial move from the March lows that you missed the meat of the future move. Often stocks, when they first break out above this green line, that's the start of something special. We've seen that from Fastly. We've seen that from Peloton, Zoom, a number of stocks this year. So going back to a daily time frame, you can see that within this overall consolidation below the green line, there was nice constructive price action starting at this high in the 1st of January or the 22nd of January this year. You can see it started this nice consolidation. And then you can see as you move further on, you have this short-term consolidation within this consolidation, that really gets this move going. At this point, it's only at about $4, so it would not be on my radar. But after this huge power and this move to the green line, this is really when it started popping up on my screens. And because of that sales growth, because of that story, and that it is a leading stock in a leading group, that's when I started really paying attention to the stock and looking for an entry. And overall, it was a potential power play because of this really fast move in a short amount of time. You can see over 160% in 21 days. That is really suggestive of institutional accumulation, and it could mean that a stock will go on for another double or triple, just like NIO did. And overall, this stock has traded very neatly and orderly. And what I mean by that is that it obeys those key moving averages, the 21 EMA, the 50 SMA. And you can see that from this point all the way back in May, it is not closed below the 50-day moving average. And this is a 1,400% move. So it's really showing something special during this uptrend. And even the 21 EMA hasn't really been broken consistently in quite a while. And actually, let's go ahead and test that. Let's go ahead and make a new formula just to see when it's closed 2 days in a row below the 21 EMA. So let's write indicator formula. Let's say C is less than X average C21, and C 1 day ago is also less than 21 EMA. Let's call that below 21 2 days. And let's save that and add that to our chart. So below 21 2 days. And let's see, I made a quick mistake. Here we go. And so you can see that during this entire move, it closed below the 21 EMA twice here. And then once again, when it was getting really tight against that moving average here. So this clearly obeys the 21 EMA. And that would be kind of my borderline if I had a position in the stock at this moment. Now let's go into these bases here and analyze when you could have bought this stock, because I did talk about it in my weekly watch list. I believe before this breakout, and also this breakout right here. And I traded it here and here, got a nice chunk of this percentage move. And you can see that during this consolidation, let's draw this in, volume is drying up just like how you want to see volume and price contraction here below this high. And then we have a clear breakout on above average volume. This blue bar means that it was higher volume than the 10 previous down days, or the down days in the previous 10 days. And then you have a follow-on day on volume once again, which is really suggestive that the move is going to continue. But then it kind of consolidates again and tightens up once more, has another breakout, tightens up again, has another breakout. And you can see that during these consolidations, once again, price and volume are contracting. Let me draw in these downward trend lines. And this is a great kind of learning chart for looking for these both price and volume contractions. So the last time I sold this stock was down here. I bought this last breakout, but I was worried about the overall market this time and probably had my stop way too close for this stock, and just formed an inside day, but stopped me out. I believe my stop was like 2 cents above the low here, so it barely stopped me out. But since then, it's gone on another rampage up above 70%. And now you see this kind of downside reversal sign, which isn't a great bar here. But overall, still above the 10 EMA. And that could be your line in the sand if you own this at this time. But overall, I think personally, it's way too extended up near the upper Bollinger Band. And it's also 70% above the 50 SMA. If we go from the 21 EMA, it's 27% above that. So it definitely has the right to pull back somewhat, form another base before potentially carrying on with this move. But after such a long move, I wouldn't be surprised if it forms another base, a cup and handle, if we have another kind of market correction pullback. But overall, this is showing clear RS, and this is exactly what you want to look for when trading a potential stock. So I hope this was a good learning experience talking about the volume and price contractions here within these bases on bases. Overall, a very strong stock and one that I'll have on my radar for the next few months to come after it forms that nice low risk, high reward entry. So I hope you guys enjoyed this video. And if you did, please go ahead and leave a like down below and subscribe if you're new to the channel. And I'll see you guys in future videos.